Hello and welcome back to the course. I'm going to look at another fatal mistake, and that's simply not willing to take a loss. And the problem that most traders have is they let emotion get involved in their trading, and they look at taking a loss as, almost a personal affront. And the reality is you are not going to make money on every trade. You will have losses. Where things get really ugly is that sometimes traders refuse to take that loss. And as you can see on the chart here that I have attached, this is a simple line chart. And the reason I have a line chart is just to kind of show the overall trend. And depending on when you got involved in this market, 84 would have been an interesting area. It's obviously resistance and Exxon, but it really doesn't matter the market. What you need to pay attention to is that there are various levels around here that you could find a reason to put a stop loss at, depending on which direction you're going. So let's say you were long here, or whatever you thought we were about to break out, and you had a stop loss at 82. Well, you need to be out of the market now. And unfortunately, far too many traders will move their stop loss. And let's just say you recognize 80 as important, and you move a stop loss to 79.90. Well, what could have been a 1 or a 2% loss, depending on what your risk management was, but 1% loss, suddenly becomes a 3 or 4% loss. And remember, compound interest doesn't work one-to-one. Once you lose, 10%, it takes like 11% to make that back. And on. 20 becomes 25, etc. So you have to be very careful with this because you're letting losses pile up. Now, in another video, I go on about adding to a losing trade. And while that is reckless, this is just as bad because it's not necessary. If your area holds, you could see the market go back towards the highs. And this happens all the time, quite frankly. And you could pick up 3 or 4% right away, as opposed to being down 3% and fighting just to break even. So that right there tells you how bad it could be. But, there are people who may have tried to buy up here and they hung on the whole time. You'll see this typically with like retirement accounts. But right now it looks like we're nowhere near breaking out, and it looks like things are falling over. So you have to let go of your ego. You have to be in the game to profit longer term. Remember, it's a long-term view you want to take. It's not necessarily that every trade needs to be a long-term trade, but you have to think about the long term of the account. In a leveraged market, and this is a CFD chart, so it very well could be leveraged, but with something like crude oil, you could find yourself upside down in a trade for a very long time, and it can become very expensive. And if you're trading like the futures markets, the margin required can get astronomical. So take your loss, live to fight another day, look for a better entry. Maybe your thesis is correct, but the timing isn't, that type of thing. You have to take the long-term look.